Hi everyone, welcome back to this week Weekly Market Update. Thanks for joining me once again. So let's see what happened on last week, coming weeks, and things to watch out for as well. Today, it seems like we are after the first earnings report of the big techs, and the market didn't perform well on last Friday. As you can see, that the Dow tumbled down more than 900 points, Nasdaq dropped more than 4%, and it closed out a brutal month. All right, this 4% from Nasdaq is significant. Why? Because if you can see, right, it's actually finished a new low for 2022. All right, and it's also, I think, is the biggest fell, about 13.3% in April, the worst monthly performance since the global financial crisis in October 2008. So, what is this all about and why market drop? There's many reasons behind which I've been mentioning, such as the 50 basis point rate hike next week. All right. So because of the inflation rate, Fed have to hike aggressively. All right, just to stop the inflations. Just like what Powell said, like what I mentioned in my last week video, they need to have the bullets, all right, to do the cuts when market goes really sour at a point of time. If they remain at 0 or 25 basis point interest rate, they got none other weapon to control the inflation rate later on. All right, so this is why market fall, not just basically on the Ukraine-Russia war. Yes, that is still ongoing. The commodity price is still at a high side on the gold. I mean, on the oil itself. All right, so many reason cause the market to drop. Another one biggest reason is because of the Amazon post earning. It plunged. This is the first time I think Amazon been dropped so badly since 2008 as well. So it becomes the latest victim in April. Technology led to sell off. And I think Amazon also given some guidance on the second quarter of 2022. So due to that, Amazon and Google closed out their worst month. All right, close out their worst month. All right, there's a lot of news. Of course, I mean, if you guys are interested, can go just to CNBC or any relative financial news, Bloomberg, whichever, to read it up. Because there's a couple of things I want to share, so I will move slightly faster. All right, so second thing, what is the upcoming for this week? I've been mentioning this sentence, sell in May and go away. Yes, it might be a myth, but it seems like it kick off and it start early. All right, it officially begin next week. Nasdaq, I think, is dropped per week basis more than 20 basis point. This is so-called fall under the bear territory at this point of time. All right, so really begins early or when news come out, this kind of news, which should be the contrarian to go the other way around. So where are we right now? We'll be looking into the chart later. All right, so very exciting for this coming week, especially as a heavy economy data with the ongoing earnings reports. All right, what do I mean by that? Economy data for next week, do take note, big earnings data coming out. There's FOMC, Fed interest rate decisions, the 50 basis point you see is stated here. Hopefully, it stick to this. If it go either way, 25 basis or 75 basis, the worst case, I think it will create a huge panic in the market because everyone is actually pitching on 50 basis point at this point of time. So even if it come out right, we can say that tech sell off this week is due to the pricing in the market effect of the 50 basis point. All right, if it didn't, I think it's just will cause another round of panic itself. And there's also initial jobless claim. There's also non-farm payroll on the Friday itself. So big economic calendar, big earnings report. So for earnings report next week, things to watch out for like AMD, Phaser, this kind of big company, right? Starbucks. So just take note if you're holding any of the counter, AMD is the kickstart for Nvidia, for Intel, for Micron, this kind of shares. Where are they standing at this point of time? All right, so this is the upcoming week economy calendar and earning calendar cover up. So did sell in May come early? We will know. Let's head to the chart instead. All right, so a couple of charts to share for this week. So for chart wise, right, we can see that what can we see here? Let me close the page first. Okay, so for chart wise, right, we can see based on Dow Jones index, which I mentioned last week, 23rd April is last week, right? If you follow me closely, rejected by the 35,600 point, came down. So on the 23rd, right, I say that yes, if let's say it break the 34,000 support, may send DJI to the next support level at 33, 32.3. Where are we? After breaking the 33,000, it closed lower. Right, so on last Friday, due to this close lower, we are eyeing on 32,300 for the next level. All right, but will there be a technical rebound? Market always give you second chance. All right, market always give you second chance. Will there be a technical rebound before it come down? What do I mean? Can you see there's a long come down, technical rebound, come down, technical rebound, come down. So it might have some technical rebound come down, or otherwise the sell in May is really kicking hard enough. There's no rebound back this time round. You're just straight away here. So either way, I'm still looking at this area to short, or I'm looking at this area to short, but you might have shorted at this area. This area is significant. Why? Let's take a look. Okay, because you mentioned remember I mentioned 34,000 is so significant, right? So if for people who zoom in to a more 4-hour or 1-hour chart, you can see that it's rejected at 34,000 for this green candle. All right, it tried to break back, go back to where does used to be a support turn resistance, but it failed. All right, it bounced, cut, and it come down. It closed below that. So this 34,000, the next day when it opened, right, it tried to penetrate one more time and it failed. So if you shorted here, this is where you ride throughout. All right, let's go into the smaller time frame, 4-hour. Can you see? It's a doji here. 4-hour, then rejected. So if you short, this is that means you have been following my video closely, because like I say, right, we are biased more on the downside. So if you want to do intraday short-term anti-trade, that means you are only looking to buy, then just be careful. If we know that the overall market is coming down, the sentiment is coming down, we only sell when it pull back. All right, like I say, we only sell when it pull back. So you see, sell down, pull back, sell down, pull back, sell down. Just like today's shares, we can see that for the market, we thought that it's doing good, but eventually the market sell down as well. All right, so like we always say, the pullback is for you to slowly liquidate your current positions. All right, so don't be try to go against it to buy it up, because when I read up, I mean we study as well. So there's one terms that we actually go through: do not fight the tape. Tape means do not fight the tape. All right, tape means the Fed. Fed say they are going to hike the interest rate. Please listen to them carefully. All right, they are not like what market is playing. They themselves said they are going to hike it. High means bad for the equity market. So we know it's one way down. We short when the market bounce back. Understand? So that is how you do trading. Okay, next, let's move on. So Nasdaq, come. Where's my mouse? Okay, Nasdaq. All right. So this is what I mentioned last week. I think I did, but I didn't draw. Okay, breaking 12,500. This level. Okay, break and close below, we'll see 11,500. Next, we fall at the 50% Fibonacci. So it closed below, right? This sharp closing is due to the Amazon, Google. Am I right to say? So let's look at a weekly chart. Where are we now? Okay, so look at a weekly chart. You can see that we break below the 61.8%, close below. We are looking at a 50% Fibonacci. Okay, so this is what I'm looking. Will there be a bounce back? Hopefully, market give you a second chance. Otherwise, it should be in this way. All right, we are waiting for this to catch up. Perfectly coincide with the 50% Fibonacci, coincide with this 200-day moving average. All right, will there be any more room to drop? We can't see the volume here for index. Let's see on the very big tech company, which is the triple Q. Can you see is the jump of the volume with the sell candle. All right, so this is the weekly chart. Weekly close with high volume with a bearish candle. I think most likely the market will continue and resume the drop. Then we might reach here. Okay, we can see that it's dropped. All right, it's the biggest drop. All right, here might be some support level, but there might be retailers out there praying for it to come back because ultimately they have this mindset, like the buyers of the big technology company like Amazon never die. All right, for how long? Google never die for how long? But to be frank, if the company provide guidance on the next quarter itself, you know that it's somehow bad in their core business. So then do not go against it. Let it drop. Why? Sell in May and go away. Because we know that earnings report, they might actually adjust on the expectations. True or not? So for company, they themselves know that the overall market is dropping. Fed is going to hike the rate. My company isn't doing well. Why should I announce a good earning report this time around? Why should I? Just announce profit guidance, let it drop with the broader market. Everything is dropping. At least people won't recognize and remember only this company is dropping. They are just riding according to the overall market. They will just blame on the bad economy, causing it to come down. So where are we looking at? 200-day moving average is the first target I'm looking. That is a very straight cut, simple cut. When we drop, we always drop free fall. When we up, we always climb the stairs. All right, this is free. This is falling. All right, this is climbing. So you see the difference. So even though it takes so many years to climb up, it just takes less than how long the period for it to come down and revisit this area. Understand? So when it drop crazily fast. Don't be the survivor or don't be the hero to block the whole elevator from coming down or the lift from dropping. Okay, let it drop and then I at the bottom. Alright, if you want to short, by all means, not stopping you, can go to the inverse QQQ to long at it as well. Next counter, let's see how Amazon is performing. Amazon. Okay, so you can see right now, significant. After break the support level, 3,000, 2,900 up to you. On the round figure, it touches the first 200-day moving average. Alright, it touches here, penetrates slightly below with a high volume. Can you see that? On a weekly basis. So we can see on the day chart, it's ugly. Alright, it's ugly. So it's actually gap down, one big gap come down, one spike. Okay, so will there be a technical rebound to cover the gap before it come down? I'm not sure, but we know that it's ugly. Alright, we know that it's ugly. So this final support level, 200 days moving average, is if it penetrate lower, we might see the next level at this area. Alright, so this is the area 2000. Sorry, approximate area 2000 might be the area for you to watch out for Amazon. Don't think it's impossible. Don't think this is big share will never say die. Their value still at the high side. I mean their matrix value on the financial terms like PE ratios, all this is still at the high side compared to the industry. That is why there is chances that for it to come here, revisit the 2000 point, and then we might see a rebound back from here. All right, depend on the strength, whether is it consolidate. So this is how we look at Amazon. So next counter we'll be looking at is Apple. Good earnings reporting, but the market can't stand with the broader market dropping. Okay, so market, what happened? Open up, go higher. People say, wow, not bad. Correct? Open up, go higher. Wow, not bad. But in fact, on the end of the day, it closed lower. So why is it? It's good. You take a look. The earnings report is good. All right, surprise, hit the revenue, hit the earnings, everything is good, but it came down. Apparently, it came down because you can't fight with the broader market. So it down almost close to 4% yesterday itself. Okay, so this is the bigger picture that I discuss. Yeah, I do some portfolio discussion for people who believe long-term Apple, who are the major Apple fans of it, which I think they are good. I did a Fibonacci drawing, retracement. So every circle, right, is a retracement that I'm going to enter in. All right. So today, just share with you guys. If let's say you have a 10 grand, all right, to invest in. So I identified 1, 2, 3, 4, 5, 6 point. Let's take out this first point is hit. 5 point to go. 10,000 divided by 5. Each time round, you got 2K bullet to enter. So 2K, 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 2K. And you will get an average price somewhere around here, which is around $100. Alright, so this is how you do dollar averaging on the certain price area that you target in. Or you can use time basis. That means every 3 months I enter in, 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 up to individual. But ultimately, first of all, you must select the correct stocks. Alright, Apple is a good shares. Even Warren Buffett is inside. It's $1 trillion, the first one to hit the $3 trillion company. So I think Apple wise is long term is definitely gonna be safe unless they tell me they are not going to do any Apple products or the product is going to turn rubbish. Then that is the whole change of the fundamental. Otherwise, Apple should be good enough. Same goes to Nvidia, strong fundamental company. This is why I bet with my friends. 180. Apparently, it came soon. Perhaps next week it hit. I'm going to collect some freelance from him. All right. So Nvidia is also a good company. We know chips definitely is a must. So you can draw based on the Fibonacci from the top all the way to the bottom to 2020. All right. Then you can do some Fibonacci retracement. Right now we are at close to break the 50%, close to the first support. So people who want can accumulate at 38, 23. Then after that you decide where you want to. Of course, calculate how much how much is your capital, then divide accordingly. All right, so that's Nvidia. Next, continue. Do not stop the do not stop the rate. Okay, getting excited. Next I'm going to announce is called Spotify. I believe you guys know what happened to Netflix. It's all about the subscriber. But for Spotify, right, it's kind of like interesting. Why? Because it beat the all-time low based on from the chart itself. All right, all-time low with the height of the volume. Okay, if this thing gonna be rebound, all right, price will be hovering around this area, $100 mark. Okay, if it's not going to cut, maybe we give a 10% deviations from the $100. Let's put a 90, 10% discount, or 80, 20% discount. If it doesn't beat or break below, it is hovering here with the market, even though it's up, down, big swing, it's still hovering here. And once it tick up above it, this will be your immediate support area. Understood? Understand that? Okay, supported 1, 2, 3. All right, so it break. Yes, it break. So we shall see whether it is convincingly break this $100 trade mark. All right. Yes, it's penetrate based on last week. All right, it penetrate and close above 100, 101. All right, just $1 differences. But with the height of the volume, you might be wary with the whole market sentiment turning bearish at this point of time. All right, so just put into your watch list, monitor it closely. We are near somewhere to the entry price to long. All right, there might be technical bounce back. Here might bounce back too. All right, so this is very important and crucial. I say very long on this counter, so you should know I pay more attention into it. Okay, another counter Visa I shared in my both private and uh public Telegram group. I zoom in to the daily chart. Okay, I mentions earnings reports coming out. All right, and then from chart perspective, 190 is a support. Give way, Visa may continue downtrend to the next support area 180, 38.2% Fibo. I dropped when I put my arrow here. I didn't drop when I start off explaining from here below. Oh, that's the difference. That's the difference. People who listen to my video, listen carefully. I didn't draw from here. That means I draw from here. That means, oh, sorry. I draw from here, meaning to say when we are at this area, all right, where we are at this area, we are looking for some pullback before we short it. Okay, so this is what I mean. Why I don't draw. I draw at the empty area previously. Of course, I'm waiting for it to come up. Then I short it round. So on yesterday, I texted in my Telegram group. I say that even with good earnings data, the market is not doing well. It might be dragged down by the overall market. Mastercard is also not doing well, so I provide some short signal. Why? Because the risk reward is really quite a temptations. All right, compared to the reward here. You see, it's definitely 1:2 or 1:1.5. All right, so it's good risk reward. That's why I mentioned this on my Telegram group. Watch out, times to short it, especially on my private Telegram lah. I give the price signals to short. Okay, so next counter, ATVI, good earnings, but not performing well. Nasdaq not performing well. This can't be spared as well. So this is what happened for this company. Blizzard is a gaming company. It is doing well during the COVID period sessions because everyone's stuck at home, nothing better to do, is only gaming. All right, or reading or studying. So gaming is most likely to be. After the COVID period sessions, the market dropped since then. All right, and the market gap up and then it dropped. So on the earnings, sorry, on the earnings itself, it means both surprise revenue and the earnings as well. So after the COVID period, market not performing well, earnings not performing well, when will you stay home to play more games? You can't wait to travel, right? So where am I looking at for Blizzard? I'm looking for cover this gap play. Then we will slowly identify where is the next area. Okay, so I'm looking to cover at this place, the cover gap. Then we will see how it goes. So that means there is more room to go down for Blizzard. Next counter, wow, there's too many. I can't share finish. Okay, there's really too many. So last week we know that performing sector is the Chinese ADR. I think the government came in and say something else. So the whole Chinese ADR performed. But when you look into the chart itself, right? Uh look into the chart itself on the day basis, it kept up, but it come down. Can see it kept up, but it come down. All right, so this is what happened. Okay, so it's not a good sign as well. It might be actually flowing to the cover gap, or this give you a chance to run off. Like I said, any go up is the pullback for you to sell down. I'm not a bearish or bias or bullish bias guy. All right, I just look at the whole market sentiments and I say what is show me. Okay, I don't bias at one end. I mean, I can make money in both sides. Why do I bias? Correct. Okay, next counter. Russia 2000. Sorry, bear with me a bit. I know it's more than 20 minutes, but this is what I'm looking at. Why I need to bring out on this. The market is dropping. Everyone is running from the big elephant. Definitely, the small elephant will not be spared as well. Okay, so this is what I'm looking at. 1,700, 1,730. There's more room for it to drop. All right, there's more room for it to drop. We are looking at so-called come down. Either call your flag come down or wages flag come down. Okay, so this is like an end. So this target area will be this target area. Okay, so this is what I'm looking at 1,730 for Russia 2000. Okay, be careful. Okay, next counter. Whew, whew. Okay, there's a lot more, but anyway, just share two more to go, two more to go. Okay, just bear with me. Hang Seng Index is kind of like interesting. After it break below 20,000, we know it's wrong figure. It be supported and go up. Okay, so this is I want to mention first. Maybe nowhere no people mentions. Uh, the overall market of the US side is not doing well. We know that. All right, why? Because Fed has been pumping this free money to the market. So we can see that since after the COVID, the market has been going up, right? Might be manipulated by mankind. Okay, so right now, if let's say they're going to vanish all the free money, definitely the market is going to drop. But Hang Seng and our local market, Singapore Straits Times, is that it's not that bad after all. Okay, I can see more positive side for Hang Seng. So we look into the day. Can you see on Friday it actually performed well? So does the money move back to Hang Seng Index? I'm not sure. But let's take a look at China A50. For China A50, right, it also not performing well, but it has been supported. Okay, it has been supported at this area, March low 2022. Why? We are coming to the mid of the year. Firstly, we are coming to the mid of the year. Second, Chinese is on the lockdown. Correct? Not due to lockdown Shanghai right now, going to lock Beijing. So it's on the lockdown. Think about it. What happened uh, months ago where we got locked down, and once we open up, the market fried crazily. So for China A50, we might see some below 200-day movement. There might be some more drop, all right, forming a good support area before it really bounce higher. Why? Few things. If China COVID settled open up, it will bounce. Second, second thing, I believe you guys have read up. I think China is going to enter into the 20th Party Congress in 2022. Basically, it's like to revamp the whole election, select the whole election. Go and read up. I didn't read much, but I know that if let's say President Xi going to elect for the third time, which is I don't know whether way possible. It seems likely. He's going to do a favor to the market. He's going to do a favor to the people, supporters, or the citizens in China. True or not? So, just like what the US market president election, they bring up the whole market, everyone is happy, economy is good. So, this current temporary drop give them a chance for them to do all these things behind the scenes before the elections itself. So I'm looking closely on China A50 as well as Hang Seng Index. I think there might be some contrarian side at the long instead of the broader market of the US, the Euro side is dropping. All right, so this is what I mean for China A50. All right, that's all for this week. I'm not going to say much. I really got a lot more, but it's going to be more than 30 minutes. So I think it's enough. So I will stop here. Remember to follow me closely. Follow me on my Telegram group. So for Singaporeans, we got a long holiday, Monday, Tuesday, public holiday. But the US market is still open. I will try, if I'm still with the market, I will send anything else updated urgently on the Telegram. All right. Otherwise, I also wish to enjoy my long holiday. So that's all, everyone. Happy weekend. Trade safe. Goodbye.